What's up, you guys? It's Matt here. So I think there's a lot of people out there that just maybe don't see the value in what AMC could bring. People will say that the movie theater chain or revenue that goes through movie theaters is dead. It's over. We're not going to see anything, and streaming is going to take over. I personally don't believe that. Revenue is not enough for these studios to go straight to streaming, because if it was, they would have done that. They all have their own platforms. Disney has their own platforms. They have plenty of users within the platform. Netflix, right? They do it. But even if they still utilize all of the movies that come from the theaters in order to kind of fill what you're browsing, to fill all of their movies and all of their TV shows and all of that stuff, right? Yeah, they do make money from these things, but they don't make as much money as you think. Netflix consistently loses money. Even though it looks like their bottom line looks great and they're profiting, they are in debt up to their ears, right? Because streaming is not a money driver right now. When it becomes the only option or all shows will get streamed kind of like it's cable, then yes. Because no one wants to, even for like the NFL, nobody wanted to, get, what was it, Peacock, in order to stream the one NFL game. It was only available on there. So if nobody's willing to do that for the NFL, you think that people are going to want to do that for certain videos. There are movies that I really want to see, on like Apple TV, but I will not get Apple TV because I already have enough streaming services, and I will never watch that movie unless it becomes or comes onto one of the other platforms, which eventually it probably will. You see it happen all the time where movies, switch and get launched on other places and all of that, right? And hopefully it does, because those seem like really good movies. But I'm not going to spend that extra money in order to do so, and there are plenty of people that are like me. So movie theaters are it. Movie theaters are the ones that are driving money for these studios. Them spending 100, 200, 300 million dollars on a project means that they have to have massive ticket sales, massive amounts of revenue, and they can't just split that revenue with other movies that are on that platform. They can't, right? So that's why you saw Disney Plus decide to introduce, what was it, $30 for a premium purchase of a movie, and that was because it makes up for kind of those ticket sales. Now, that was a while ago. They haven't done that since, because movies have been in theaters, and now movie theaters are starting to make a little bit more money. You see AMC that's becoming profitable in the last 2 quarters, and you're seeing the upside of it. Streaming can't take over that. That's just my opinion. I understand streaming will be big, and they will find a way to do that, where advertisers will pay a lot more, and they'll be able to make money not only through the revenue of the streaming service, but also through the advertisements. Eventually that will be the case, and then movies that you watch on these streaming services will become what we watched on cable, which will be dumb, because now we're watching ads in the middle of our movies and we're fine with it, instead of going to the movie theater, paying $15 and loving that experience of going to the movie theater. So I think we will see where streaming does have an impact, but movie theaters will never go away. They kind of classify it the same way as drive-in movie theaters, but drive-in movie theaters were not profitable because you only had a certain amount of space and one screen to go off of, or a couple of screens where people had to jam in there, and no one wanted to do that, because if someone wanted to leave at a certain time, they can't move because somebody's in front of them. And it's just not, it's not practical. It also goes by weather and just a lot of other factors. All right, so if it rains, what are you going to do? You can't do anything. So anyways, it's not compared to the drive-in movie theater. It's its own animal. And movie theaters will never go away, in my opinion, just to kind of preface this whole video with a 4-minute statement. Guys, if you could, we're going to talk about AMC in this video. Hit that like button, hit that subscribe button, hit the notification bell for more of these videos. Also, make sure you check out any of the links that are down below. It does help out the channel. And if you want to follow me on Twitter, follow me on Patreon, those links should be in the description as well. But AMC is sitting at, let me go ahead and get in here. I tried to get in here, it didn't work. AMC is sitting at a gain today. You know, you're seeing it up about 2.16%. Now, it all depends what will happen when this video is uploaded, because what we're looking at is a full like 100,000 foot view of everything. But if we're looking at the minute chart, we can see how this has fluctuated, right? It decreased down below $4 and then increased up to $4.10. And now we're seeing it back down to where the 200 EMA is, and may end up bouncing off of that, which would be great. Pushing it back up to $4.10. I don't know if I said $410, but $4.10. And then hopefully pushing up above that and seeing it kind of create higher highs and higher lows. But as I look into things like the financial statements for AMC, there's things that I like to focus on, right? Yes, they're finding ways to bring their debt down. Yes, they have cash on hand so that they can find a way to survive through anything that could be a horrible time. But movie theaters are open. Movies are thriving. Actors are not striking. Writers are not striking, I don't believe. And we have everything functioning as normal. Money is being spent. Movies are being created. I'm going to go see movies. Other people are going to go see movies, whether it's superhero movies or documentaries or whatever. But if you look at the net income after taxes for the last 2 quarters, you see a gain, right? Instead of looking at the previous quarters where you saw a $235 million loss, a $287 million loss, you are now seeing an $8.6 million gain and a $12.3 million gain here. Meaning that we're seeing revenue, we're seeing expenses all line up the right way, and we're working through this to find the light, to find a level of positivity. And what you're also seeing within there, as you have all of this positivity, is shorting is still going on. So if shorting is still happening, that means that you still have the possibility of seeing some sort of a short squeeze within it. Now, there's a lot more information that's behind the scenes that we probably don't see when it comes to the short interest. This is what is just displayed to us. And that's why, we get really hype about what this should be, because it should not be what it's worth right now. If we look at, I'm trying to find where the free float market cap is. If we look at the overall market cap, this should be a multi-billion-dollar business, because it sees multi-billion dollars in revenue, right? In a year. You're looking at a quarter, you see $1.3 billion, $1.4 billion. This should be worth way more than a $1 billion business, than a $1 billion market cap. Double this point, yes, for the last 2 quarters, triple this point for the last 2 quarters. That's the way that it should look. Looking at it, instead of a $4 price point, you're looking at a $12 price point just to get it up to where the revenue was for the last 2 quarters. But if you look at revenue over 4 quarters, you may see $4 to $8 billion. We should be seeing this at an 8 to 10, maybe even more than that $billion market cap overall. Meaning that this should be worth, 8 times where we are right here without even including the short interest. And also, I would see so much more when it comes to how much they can gain in the end and how much they could put forth towards, paying off debt and getting back to square one. I feel like AMC is slept on a lot. Even though we have a lot of retail traders, a lot of retail investors that believe in this position so much, it's still slept on by a lot of smart money, by a lot of people that feel like they know best. It's been so long. It's been multiple years that this has been taking place, and we just haven't seen the movement. And everybody knows all you have to do is factor in time, and then people will start to spread out. They'll start to throw their money into other places because they don't believe in this position as much. They may believe in it a lot, but they want to believe in how much they can gain in revenue over believing in that position. I'm in it to win it for the business, not only for my gain, but for the business, because I like AMC. I've grown up on movie theaters. My family has grown up on movie theaters. My childhood was grown up on movie theaters. Our relationship was built on movie theaters. That's basically what it was all about. There was one weekend where we saw 4 movies in 3 days because we love movie theaters. We love going to go see different stories and experiencing those together. It's an experience, and you're never going to get away from that. So anyways, I hold 500, just to let you guys know. I hold 500 AMC right now, and I plan on consistently adding more. It's currently at a cost basis of $59.02. I would imagine the cost basis is a lot lower because I only invested 16,000, which I took 10,000, so I need to get to a break even of 6,000, and I'm currently sitting at about 1,000, 1,500 or something. So I really don't need to go that much further in order to get back to a break even point. But I'm not just trying to see break even. I'm trying to see much more than that. But anyways, guys, let me know what you think about this. Let me know what you think about AMC and the short interest and anything that's going on with it. But I'm gonna get out of here. Hit that like button, hit that subscribe button, and I'll catch you in the next one. See ya.